Friday, June 7th, market analysis, and we have a heck of a day in progress. A variety of things are happening that are probably going to end up being important depending upon how the market closes. We have on the E-mini June futures contract the potential of this broader approximate 2-month double top formation, plus the possibility of a smaller double top formation in the last 2 weeks. That's part of the bigger one. We have today a engulfing with currently higher quotes, up 1350, not that much, a little higher than yesterday's close. If we close lower, we will have a bearish engulfing, which is normally bearish by itself, had nothing to do with the ER signal per se. Like these red daily bars are all my official coded automated sell signals. So if this closes below yesterday's closing price, we'll have a bearish engulfing. Unfortunately, it didn't get overbought. Therefore, we don't have at this point the possibility of the price action turning red. All of these other signals were overbought or overbought at the same time within the previous short number of days. So that's why they're red. Let's look at the 5-minute chart on the E-mini. And I will mention some fundamentals, which I normally don't. The job report this morning came out extremely good, much, much better than the, I think it's 175,000 they were expecting, right around there, for the jobless, for the new unemployment. Instead, we came up with 270 some, I think, a lot larger percentage of employment than expected. Now, the government says, oh, that's good. The economy's doing fine. A lot of people are more employed. I guess we're not in so much of a rush in order to lower interest rates. And the stock market in general has been anticipating that, unlike last winter, we thought it was going to, the government, the Fed, was going to lower rates by now or next month or something, summer, spring. And that changed. So the market, excuse me, had a break. That's the first high, not on this chart. Let's go to the spider, a disappointment on this rally, and then it came down into April. Then it looked like we were going to have this fall. Now it looks like maybe, pardon me, got a bad cough. They're going to maybe procrastinate again. So this morning, the first thing that happened, and I'll go right to my NASDAQ. All of a sudden at 5:30, seemed like good news at first, and the market jumped up, and that makes a high higher than yesterday, which is in yellow. So it, for a minute or less, was higher than the previous day's high this morning, and that was up here. Excuse me. Got to get the right data on the screen, right there. So it jumped, right there, higher than the previous day's high. And it got overbought on my daily. Here is yesterday's overbought condition, just barely. But again today on the daily NASDAQ futures contract, NQ June, we now have a bullish at the moment engulfing, which is no signal whatsoever for me, because we don't get a sell signal when you're overbought and you have a bullish engulfing. If this goes lower on the close today, if it closes today at the end of the day, before the weekend, lower than where it closed yesterday, this will turn red. I will have another major, hopefully, sell signal. Very serious. If that's true, then I think we're going to go down at least to the lows that were made in most indexes, if not every one of them, on April 19th. And then, if that's true, we have the possibility of a, let's squeeze this the way I wanted to, sorry about that. Then we have a much bigger double top formation that has a downside objective that would be a lot lower, down into the area of, I don't know, 15,800. I'll talk about that if it happens. Now, this is premature. I need to have it close below yesterday's close, period. If that doesn't happen, we have a bullish engulfing, which means, and that's what we got right now because it's higher on the day by 73. That means that these levels could accelerate upwards very sharply and quickly. I'm going to say next week we might even approach the 20,000 level. That would not surprise me. Okay, I'm going to skip these other indexes. I made my point. The Dow Jones daily data, we have a sell signal on the high day on the first high of a double top formation. We have a buy signal on the bottom day between the two highs, the low. We have a sell signal on the next high that we have had to create the double top, potential double top. And the decline into about a week or so ago looked like it was about to break out and go down to all the way down to 34,677 because of the double top. Now we have at the moment a green buy signal because it was oversold a few days ago, and within the allotted amount of time, a little bit of a secret, we have an outside up day. So the Dow Jones futures YM is contradicting what I'm expecting on other charts, especially if the other indexes close lower than Thursday's close, yesterday's close. Then I think the Dow Jones will probably do the same thing and the green will disappear. It'll be white again, and it won't have a buy signal. And then I'm bearish quickly, immediately. So it's make it or break it time here today. I've not seen this kind of situation develop for a long number of years, and I probably could say decades. Look what's happening to the Russell. It did make a lower low for the whole move. Now, normally that's bearish, but here we are trading back down toward those previous lows, right around a little bit of support over the last several days. Again, the Russell's not the same as the other indexes, the Dow, the Spider, the Qs, NASDAQ. It has its own mind. It doesn't do the same thing the same way at the same time, a lot of the time, sometimes yes. So it looks like it's still basically on a bearish track, and that's not going to work if all of the other indexes go up a lot. It'll pull the Russell up probably. On the other hand, if the Russell still stays bearish, which it looks like it is, and the other indexes have bearish engulfings, then everything's going to go south quickly, in my opinion. Bonds have a bearish engulfing ER sell signal now, almost low and last. We have the higher high than yesterday. We have the lower low than yesterday. We have overbought conditions for the first time in a few weeks today. This is a sell signal flat out with the ER signals technique. This technique has gone short. We're short bonds. We went short the moment it got below yesterday's lows. We're currently trading down here at 117.18. I'm looking for lower levels. Probably a test of the 114 area and maybe a little bit below that. I'm not long-term bearish. I'm bearish probably for a month, 2 months. 10-year notes, exactly the same thing. And by the way, in bonds, well, no, it kind of looked like a possible double top forming, and that's too high. Today's high is too high. So same thing in notes, but bearish engulfing. We're short. This is a good signal. Of course, unless it turns around all of a sudden and goes back up above the previous close. That's probably not going to happen. If they turn green or red, they usually stay green or red by the close. Crude, oversold, rallying a little bit. Today's rally high is right smack against resistance. Perfect place for a potential short. Small move down from resistance levels. I think it's about to challenge its lows that we made a few days ago this week and make lows. Maybe we're going to get all the way down to 67 or lower. Next, natural gas. Sell signal several days ago, work for a couple of days. That's all right. Money to be made. Now on a rally, is the longer term trend changing? to up, because prior to the beginning of May, the trend was pretty obviously down. Support finally caused a turn and a very good rally that got overbought. Now we've seen a dip. But if you start making higher highs and higher lows, that's going to change the longer term picture. And if that happens, start closing above 3.183, then we're probably going to go up to 3.5 and maybe all the way up to 4.25. Next, heating oil. No major changes here. We just hit support, got oversold, have a 2-day, 3-day bounce into resistance. I don't see any good reason for it to keep going up. I think it's going to stop maybe a touch higher and turn down and make new lows very soon. Maybe it'll get up to 2.39. So far, today's high is 2.37. And it could have stopped right there. We're almost low and last, and we're down on the day a slight bit. Next, heading south, gold. I don't see anything here that's going to prevent it from going all the way down to previous lows here, 23.21. Silver. Huge bearish engulfing today. Just a second. I goofed up. My fault. No, I didn't. No, I didn't. That's current. Oh, I see what's wrong. I have a 1-minute chart. I'm sorry. I thought it was daily. That's why the damn thing had not turned. And I will show you how I turn on some of my, it's already enabled. Calculating, that's good. Just wait a few seconds, ladies and gentlemen. Look at the price range today. That is a very large bearish engulfing candlestick, including the highs, not only for new highs for about 2 weeks, but new lows for over a month. That's a bearish engulfing. It implies we're going to see lower levels, and look how close we are getting to the breakout of this obvious good-looking double top. No problem with that being a double top. Overbought on both highs. We're about to break out. If we do on a closing basis, closing below 2308, we're supposed to go down to 2143. Silver again, bearish engulfing huge, no signal per se, new low since the highs were made in overbought conditions, just simply bearish, not too much more to go on. Right now, slight support. I don't think it's going to hold with the momentum that this bearish engulfing is giving it. I think you're about to see maybe even next week, 27.7. Next, we got the top of the market in platinum. We have new lows since the sell signal. I think it's going to go down in the approximate broad range of below 930. And it's already at 972. Looking for it to go down more. Next. Oh, wait a minute. Platinum is very, very close to oversold, which is 25 for me, not 30. I learned RSI from Wells Wilder himself, stochastics from George Lane, Bollinger Bands from John Bollinger, et cetera, et cetera. I was one of the lecturers for the previous 35 years, worldwide circuit, so on and so forth. So, what can I say? We're going to go down, but we're so close to oversold, we might bounce a little bit first, and then in a couple of weeks after a bounce, get down into this lower range that's been established since, what is that, late June of 23. Next, copper. Sell signal here, okay for a couple of days, but certainly nothing to write home about. Nothing on top, unfortunately, just got very overbought. And now we're seeing new lows again and getting a little bit below some support. I'm looking for lower levels. No ifs, ands, or buts about it. At least 4.37 down to 4.28. Next, minor double top. Now, this is the grain index, grain group, beans, oil, meal, corn, and wheat. Beans have a minor double top. They did break out earlier this week. We have been already a little more than 50% down to its minimum downside objective, which I will put a little arrow at, so we can define it a little bit better. And that's my minimum because of the double top downside objective. So it's still in support. Won't damage, but coming close to it, the longer term possibility, probability, likelihood, in my opinion, that the grains have got a major long-term bottom built. And it's just a matter of how it zigzags back and forth and starts to make new highs again, if I'm right. But I am a little bit bearish before all of that bullishness starts again. Soybean oil, not quite a new low, still has the possibility of the broad 2-year head and shoulder bottom in the wrong place, too big in size, don't really favor this pattern, but all the body parts are there. So it's not ruined. This little dip here in the last few days could start to do some major damage to the pattern. So they're not necessarily symmetrical, very symmetrical. They're a little lopsided sometimes. The trend neckline at the top, the broad, wide yellow dash line, could be flat. It could even be upward slanted somewhat, not usually. For a bottom formation, they're usually downward slanted a little bit, which is exactly what we got. Not a problem. It's whether the lows in the next few weeks, months, are higher than the lows that we made on May 9th. We'll find out if this head and shoulder works or doesn't work in the months to come. It's going to be a huge move, which I don't believe is going to work out. Remember, I don't like where it's forming and I don't like the size of it. Next, meal. Double top, and we sold the second high in the double top just several days ago. If you're watching my YouTubes every day, or once every other day, once or twice a week, you'll know that that's correct, because I say it every day. New low for the move since then, but we're coming back fairly well at the moment. I think we're going to go down to the minor downside objective of 340. That's it. Next, and I'm still bullish long term. Corn, all the grains I'm bullish long term, but they've got to perform correctly. Oversold conditions the last few days, rallied out of it, not anything great, didn't make any lower lows for any substantial amount of time, maybe 3-4 weeks at the most. But there's your bottom we bought. Green, bullish engulfing, automated trading system, ER signals. Got the bottom in beans, got the bottom in corn, got the bottom in meal. Going back to meal to show you the green one right there. February 29th, February 26th in corn, and wheat, March 11th, the bottom. But for wheat, we have two sell signals, and the one that just was created June 3rd is going great. Down day, next day, down day, next day, down day, and today's a down day every single day since our sell signal has gone down. I'm sorry, it's not the highest high for the rally like we see many times, or the lowest low for days, weeks, and months to come sometimes, even years occasionally. That's why I built the ER sell signals strategy, to pick major tops and bottoms. But I find over the decades that I've been developing it, that it also finds short-term signals as well as very long-term ones for those of you that are scalpers. Big pennant formation developing in cattle. Kind of got to wait for a signal, and I'm very neutral at 40, 50 area in RSI, so I got nothing. I could go up a little resistance to 180, it wouldn't surprise me. I could go down toward the bottom of the pennant, very big pennant. It started with my sell signal on the exact high day, September 19th of 23, crash. Look at the size of that big bear move. December 7th is when it finally bottomed out, going down from approximately 188 to approximately 160. Huge move. No other conflicting situations are actually in the interim. There's a buy signal, but it didn't work. Well, it did for a couple of days, but didn't change the trend. Still stopped at where it was likely to at resistance. So I'm going to beg off on cattle until I get something going. Hogs. We sold the top of the market to the exact day. Sell signal April 10th. Turns out it had a head and shoulder top, broke the neckline. I calculated the downside objective. We passed it only 3 days ago. So that worked out like a charm. One minor problem in the interim, no big deal. Great. And that is going to be it. I'm passing the New York cocoa, coffee, sugar, cotton, OJ because of data feed problems with the exchange, and they're just making me very upset. So, and they're not that popular, unfortunately. That's too bad. There's been some great moves in those markets. You guys have a great weekend. Remember, I'm not going to broadcast, record, provide you with a YouTube starting next Tuesday, the 11th of June. I'll be unavailable the 11th, 12th until the evening of the 18th. I'll restart my YouTubes on Wednesday, June 19th. You have a great trading day. See you Monday. Monday's good. Bye-bye.